Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Since the end of October and the beginning of November, it has been just straight bullish, straight one directional move to the upside. The last 3 weeks have been bullish, constantly giving us higher closes. Intraday has been tough to trade, but overall the bulls have been smashing the bears. But the question is, has the bulls run out of strength? And with what, 3 green weeks in a row, will this be the week that we get some type of pullback? Okay, and why do I say we're running out of strength? Well, you guys seen the price action lately. It has been pretty weak during the intraday price action. During the trading hours, it's been pretty weak, giving us chop. You can see on the daily chart with the candles just tiny, the volume getting smaller. And you know, it was a holiday week. Most of big money was probably on vacation. But now that vacation is over, can we get some volatile moves? And let me tell you, those who are struggling to trade the SPY, I just want to remind you guys, trust in the price action. And if the price action says choppy, you gotta trust it and go to other ticker symbols like Tesla, for example. As you guys can see, this is 30-minute chart. SPY didn't do anything on Friday, but Uncle Charles is now doing more analysis than he ever did before in his Discord, adding Tesla, updating it throughout the day, same way I do with SPY. And I wrote here 234.5 is first resistant, must clear to put 236 and 237.5 in play. We're just looking to react. And I put the bear case: if the 232.5 fails, then the 231 buy zone is in play. So we clear resistant, we look to long, we break down support, we look to short. And we wait for the price action to tell us what to do. And as you guys can see here, this purple line was my 234-ish level. Broke out, boom. So we couldn't trade SPY. It was so choppy, but we was able to trade Tesla. Boom, broke out 234.5, hit the next target, level to level move at 236. Okay, and when it cleared, keep in mind, when it cleared, you know, I'll tell you guys when to take profit. I said take most profits around 236 and leave a runner, leave a runner as long as price stays above 234.5. Okay. And then when 236 cleared, I wrote 236 cleared, put in the higher targets in play. Don't get puts unless 236 fail. You guys see when cleared 236, boom, smashed the next target at 237.5, even went as high, almost hitting my 239 target at going as high as 238.75. It was a great trading move. Now, when do we call a top? Anybody want to answer that question? When do we call a top? The correct answer is we don't. We never call a top. We never call a top. That was a trick question. But what we do is wait for false breakout setups. Now, I didn't trade this setup personally, but I love to see that it worked out because, you know, we cleared at 237.5 level, and look at that. The candle that this pink line is pointing at, the 1130 candle, broke back below 237.5. The following candles tested that level as a resistance, showed selling pressure, and boom, dropped back to the downside. Gave it a nice level move, 236. Going a little lower to end the day. Holy moly, guys. All we got to do is follow the price actions. Know the levels, know the setups, and just trade it unbiasedly. Like a sheep. Now, I'm telling you guys how to trade these levels for educational purposes. So when I give you the trading plan, you guys know what to do. So we're going to talk about Tesla's daily chart analysis and the plan for it later in the video. Definitely stay tuned. But let's make our way back to the SPY because, you know, SPY is my first love here. I don't want to cheat on SPY and trade Tesla. But SPY has been giving me no choice. But the question is, now that vacation over, can we get volatility back? Now, the setup that I have for you, the price action or the chart context that I have for you is this. We have a setup, guys. And inside daily candle setup. These setups happen often when we're in like chop phase and the market's getting weak. And let me show you what I mean. What is the range? I'm gonna have to zoom in on the closer candle, you know. So Friday's candle, the range was very tight. The low was 454.7 with the high at 455.5. Nearly untradeable, pretty much, unless you were scalping. But look, that candle's range is within the previous day's range. It was in Wednesday's, is within Wednesday's range. Wednesday's range being 453.89 up to 456.38. Got an inside daily candle setup. And how do we trade this setup? Pretty straightforward. We trade this setup when we break the mother candle's range. Okay, now if you look at the Tuesday and Monday's candle, you notice, hey, uncle, we had an inside daily candle setup there. Don't really look like it worked out that well. Well, this mother candle, the Monday range was 455.13. We didn't get the close here on Wednesday. We did get the close on it Friday. So, like I said, 455 is a support level. That's a level I'm watching, okay? However, the big level that I'm also watching is 453.89. We can round that, and I recommend rounding it down to 453.5. That's my support level. If we break down that support level, then this little chop, this setup, this mother candle setup is going to play out in favor of the bears. All right, we break down 455 and 453.5. Those are our triggers to go short or enter puts. That's the price action telling us enter puts. And my target, I played level to level, no greed. 451.4 will be first target to the 452 zone. I'm going to secure most of my profits down there. If I short 455 and 453.5, I will take most profits at 451.4 to 452 zone and leave a runner as long as price can stay below 453.5. Okay, I would stay bearish below 453.5, and a breakdown of 451.4 will give us a really nice false breakout setup, because you guys can see here the previous week of mid-November we had a double top. So if we break back below that, this could have been a liquidity grab and a false breakout that could send us a lot lower. I'm playing level to level, of course, 450, 448.7, all the happy stuff, 446. But we could get a lot deeper. Now, let me tell you guys something. You don't have to call tops and bottoms. Remember when we was on a downtrend since July, before this crazy rally from all November happened, we didn't have to call a bottom. It was the false breakdown setup that gave us the trigger that to go call getting calls, or that a bottom was in. Okay, look where I point with that pink line. You notice this blue line. If I zoom back, 2023 uptrend. Well, this is from October 2022 low up to July high. That's where I got these blue fib levels from. Okay, and the 38.2 fib level at the time was at 416.9. I think I was referencing the 417 level at the time. But you guys can see here with evidence, when we was on a downtrend and so many people were bearish, we had a false breakdown setup. And what did that false breakdown setup lead to? Big move to the upside. We even had this structure, this multi-month structure here, this flag megaphone looking downward pattern, whatever. We gapped out a bullish breakaway gap that led to more upside. Okay, so the price action just kept giving us bullish signs. Now, all I'm saying to you is, before we get bearish, and instead of calling the top, allow the price action to give us bearish signs. So we didn't have to call a bottom here. We might have missed a few dollars, but we didn't have to call a bottom here because that false breakdown setup led to a massive move to the upside. So instead of calling the top, wait for that false breakout setup. Okay, with those levels that I gave you, 455, 453.5, 451.4. If those levels fail, that's bearish. Look to short, and then we'll put lower targets in play. 448.7, 446. Below 446 could get a lot lower. It would be reasonable to fill the gap, which is around 440. All right. Now that's the bear case scenario. The bull case scenario would be to break above 456.5. That would be the mother candle's high. It's actually at 456.38, but I have a personal resistance level of 456.5. Whatever level you guys want to reference, up to you. But overall, break above that level, 456.5, will be a breakout above the mother candle's high, and it could put 458 in July high at 459.4 in play. And if we break 459.4, I got 461, 463 plus in play, new 52-week high above that. Okay, let's keep this simple, guys. Vacation is over for big money. Let's see if they enter back into the market and what they're gonna do, and the price action will reveal that to us. I gave you guys a chop range, 453.5 up to 456.5. Watch the break of that range and just follow the price action. Okay, guys. Triple Q. You guys see July's high is at 387.98. We'll just round that to 388. Keep it simple, okay? We broke out of 388 back on Monday, right? And even though it's been choppy ever since, we never quite broke back below 388. So if you're a bear, you need that false breakout setup. Breakdown of 388 and 386 are your triggers to go short, to put lower targets in play. Put it 383 in play first. If that fail, we're going to go a lot lower. I'm favoring the gap fill at 378, but the gap fill is at 377. Excuse me. 377 is where the gap fill is. So below 383 would be bearish. 381, 379, and 377 gap fill would be in play. But it all starts only if we get the breakdown of 388 and 386. Overall, above 388 is still bullish. Resistance at 390. 391.5 and 393. All right, those are the levels that must clear to give us more 52-week high, especially 393. Okay, guys, IWM has been basing below this 50% fib level at 180.2. If bulls want more upside, that is the level that must clear. It could be explosive, so be careful. Above 180.2 would be bullish. 182, 183.5 and 185 would be targets. For me to be bullish, I like to see support fail as usual. 178 and 176 are the support levels that must fail. Below 176, bears in control with 174, 172, and 170.5 in play. Okay, Tesla, while SPY has been chopping, Tesla's been giving us some decent level-to-level move. However, it's also been in its own chop range. Okay, it's just a bigger chop range, which made it tradable. But it's still a chop range nonetheless. And the chop range that I got is the 231 buy zone up to the 243 sell zone. You get a lot of selling, a lot of wicks when we get to 243. And we got a lot of buying when we got down to 231. So anything in between that range to me is chop. It's tradable chop, but it's still chop. So you got to be careful. All right. So the levels within the range, I got 236 as resistant with 237.5 and 239. Please add these levels to your chart so you know when to go long and go short. All right, and if 239 clears, 240.5, 242, I think I got my levels wrong. Crap. I got 240.5, 242, and the correct level was at 243.5-ish. Okay, my fault. Let me move that to yellow so you guys can see the chop range. I'll put this as blue. All right. So the chop range, it's in yellow. 231 to 243.5. I knew something was off. Anyways, so yeah, if bulls want more upside, they'll need to clear those resistance levels. But overall, the chop range ends above 243.5 to put 245 and 247 in play. All right. Support is at 234, 232, and 231. The buy zone is at 231. So if bears can break that down, they're taking out a strong buy zone and would possibly head down lower. With all the buy orders taken out, you may not have much support to stop the Tesla from dropping lower. Okay, so below 231, I got 229 and 227 with 225.5 below, okay? Apple, it's lingering around. I had to adjust my fib levels from July high down to October 2023 low. Fib levels at 191.26. It's been basing just under it. It's rejected a little bit though. Yeah, if bulls want more upside, they're gonna have to clear 191.2 and 193. Those are the two levels that must clear to trigger more upside. There's still that gap at 195.5-ish that it can possibly hit, but it's gonna have to clear 191.2. Okay, as of right now, the immediate resistance is 190, and as long as below 190, Next support is at 188.5, and if that fails, holy moly, we're going to get down lower, 187, 185.7. That's a gap fill, and possibly even lower down to 184, and the next gap is at 182.8ish. Holy moly. NVDA. Yeah, while Tesla and the indices and stuff were chopping, NVDA was giving us some nice, beautiful move. For my tier 2 members, I hope you guys made bank on this trade. I wrote trade ideas on NVDA, one of my favorite stocks. I put nice breakdown and sell-off for NVDA on Wednesday. You guys can see that sell-off on Wednesday. Big red candle. Can bears continue? If they do, the next critical support that must break down are 483 and 481. 481 is based on July's high. If it failed, look to short with the lower targets in play, okay? I gave the setups based on the levels, okay? And the bull case was above 485 and 487. And I wrote, you know, if those levels we capture, we can look to long. But look what happened, guys. NVDA, that green line right there is my 481 level. That was July high, and it broke down. It actually opened around 484.7, so it broke down my 483 and my 481 level, going as low as 477.4ish. That's a really nice move. So for me, I am bearish on NVDA right now as long as below 481. Bearish fall through for me would to break down next support at 476. This was a strong pivot high back on October 12th. It has some selling pressure. It was a pivot high, and it led to a lot of downside. And then we captured that level back on November 10th, and it led to strong upside. So if we lose 476, that's a false breakout setup based on that pivot high. It could be very bearish, okay? RSI is now oversold, so there's some energy, possible some energy to head down lower, down to lower targets. Below 476, I would look to short. If 481 recaptures, then that's be a good time to look to long. False breakdown setup, play it level to level. Above 481, I got 483, 485, and the gap fill at 487-ish. Play it level to level, leave runners, okay? So overall, bearish below 481. Breakdown of 476 would be the bearish fall through, and then above 481, maybe I'll be bullish with the false breakdown setup, okay? AMD got a rejection from the 78.6 fib level. I have fib level from June high, June high down to the late October low. We got a rejection from that 78.6 fib level at 124.33, and now we have an inside daily candle. So overall, 122.2 and 124.3 are resistant levels. Those are the two levels that must clear to be bullish. Now, if we're gonna be bearish, 121, 119, and 117.5. Those levels must fail. If they do, look to short. Bears in control below 117.5 to put the lower targets in play. All right. What else I got? Meta. Okay. So yeah, it's been struggling around at 338.5ish level. We broke out, dropped back below, broke out, dropped back below. Okay. So as of right now, I'm not trusting breakdowns or breakouts of 338.5 right now, even though it's a critical fib level. So for bearish fall through, that's think of it as equilibrium level. A bullish above it, bearish below it. So if it's below it, I need to see the next support fail to show fall through 337, and that will put 335.5 and 334 in play. Below 334 is bearish, and we'll put 332 and 330 in play. All right, now above 338.4 would be bullish, but follow through would be to clear 340 and 342. If they break out those levels, 344 and the next fib extension level at 346 would be in play, okay? Netflix gave us that breakout. I had a level I was watching at 477.5, gave us that breakout. So as long as above 477.5, this crazy steep up move is possibly can continue. That would put 480, 483 in play, and then 485. 485 is July's high. Maybe we get a double top there, okay? Now, if we're going to break down and put a top in, it's going to have to break down support starting with 477.5. That would put, we actually have a gap at 475. So gap fill at 475. You know, Netflix is a pretty volatile stock. So below 475, we could drop a lot lower. But I'm thinking we could drop down to 471.2-ish and 469. If those levels don't support, 467.5 is the next target. And below that, bears take control. Okay, guys? Google got a strong rejection. It tried to recapture that pink trend line, but look at that rejection from that pink trend line. It gapped down and it just went down, continued down, and look where it bounced off that pink line. Now let me zoom out a little bit. That pink line is my 78.6 fib level, 137.4 from all-time high all the way down to November 2022 low. Okay, so we recently cleared that level and treating it like a support. So if we're gonna trust the bounce, it needs to get or stay above 138 and clear 140 and 142 to put 143.5ish and higher back in play. Okay, but I'm telling you right now, if that 137.4 level fails, we are going to drop down. I would be bearish below 138 and especially 137.4. There's a little cluster of support down there, but overall that would put 136.4, 134.8 and 132.8 in play. I'm thinking a loss of 134.4 137.4 would give us a deeper sell-off. Okay guys, possibly, you know, this could be a head and shoulder as well forming on Google here. So it's just something to be careful about. Loss of 137.4 would be bearish follow through, and a break back above 140 and 142 would be bullish follow through. Okay, Amazon, cool. Still within this megaphone pattern. I got an inside daily candle setup. Okay, mother candle ties at 147.74. Yeah, I'll round that up to 148. I actually have a resistance there. So above 148, I would be bullish. Look to long with 150.4ish in play. That would be the top of the megaphone pattern, and above that would be a breakout of the megaphone pattern. But overall, I got to clear 148 for me to be bullish. Now to be bearish, breakdown of 145.8 to 146 zone would be a good start. We're going to use 146 as a pivot level, but overall below 146 would be bearish. Putting 144.5 in play with 142.3 and 140 as targets below. Okay, guys. Let me move on here to the dark pool. Wow, this is a lot of charting I've been doing. So dark pool order, we actually got some 2.9 billion in premium at the 455 level. So you guys, you know, I've been telling you guys for quite some time that that 455 level was critical. Base, I don't have it on my chart. Let me add it. Based on this critical trend line here, from all-time high to July's 2023 high. You guys can see that. And we managed to break above it, guys. It's a very weak, low volume. It's very weak and low volume. So I don't quite trust it. Oh, I messed up on the... Yeah, see how it doesn't quite touch it? Let me just make sure it touches. Yeah, there you go. All right. So you guys see that this July high, that's the second touch, and then November 20th's high, that's the third touch, and we touch it a couple more times, and we did get a breakout of it. It's a very weak breakout. I don't really trust it. So for me to trust this breakout of this multi-year trend line, like I said, you got to stay above 455 and clear 456.5 to trigger more upside. If we break back below 455 and 453.5, that's a false breakout. And you guys can see here, dark pool level, there's billions of dollars in premium coming around that 455 level. So even big money is recognizing this level. So remember, guys, above it is bullish, below it is bearish. All right, let's take a look at the option flow. Now, you guys, one of the viewers asked me, can we look at what you say, 100K premiums? 100K premium, or was it 200K premium? I like to pay attention to the big money, but you know, we might get a little more details with the smaller 100K, all right? I highly doubt any retail traders walk around with 100K to trade the whole thing, you know, for options. And even they did 100K, I would hope they don't trade that whole thing in option, maybe just 10% of it or something. But anyways, here's 100K, filter for 100K in premium. A lot of sweep orders. It's pretty aggressive. Mostly puts, guys. All right? 78,000 in puts compared to 12,000. Holy moly. Triple Q. Let me know in the comments below if you guys prefer this setting, looking at 100K and above instead of just looking at 500K. Let me know, guys. I'm here to serve you. 60% in the puts. Not very, you know, not a lot of quantity-wise, but It's definitely more puts than calls. IWM, bearish. What else? Tesla. It's a lot of sweep orders and puts. Tesla is actually bullish. Let's look at the context. Mostly calls. We're seeing a good amount of sweep orders. Okay, we got a couple above the ask, and they both were sweep orders. Okay, so Tesla is bullish. Apple is overall bearish. The sweep orders, it's a little bit mixed with calls and puts, but there's quantity-wise, there's more puts than calls. It's not much more. Whatever it's worth, guys. NVDA, it's a little bit more bearish than bullish. 54% compared to 45%. Let's sweep orders. See a good amount for calls, good amount for puts. But the calls are just at the ask, while, okay, I guess one above the ask. But a lot of the puts that are coming in are above. Look at this. Sweep orders above. But yeah, you can't look at it too much. This is, look at the dates on these. November 24th, November 24th, November 24th. So we look at NVDA, we look at it in hindsight that it actually, they were correct. Okay, they were correct. So that gives me some hope looking at this. So if we look at the correct dates, like I said, look in the old dates, you know, the December dates, got a good amount of calls coming in. The puts that did come in were mostly expired already, guys. So that might be a little disappointing for you guys. But for the ones that aren't expired, you guys can see that they're mostly calls. All right, so context matters. And even though it's overall bearish, those are from November 24th. They're already expired. I don't know why option flow is still showing me. Maybe I'll need to add more filters. But looking at the context, the ones that are not expired are mostly calls, guys. So keep that in mind. AMD, mostly bearish. Let's look at the dates. Okay, so none of them are expired. Mostly block orders, and for the sweep orders, the aggressive ones are definitely bears won that one. Okay, so yeah, overall bearish for AMD in the flows. What else I got? Meta, mostly bullish, but look at these block orders for calls. The one sweep order is a put. So even though it's mostly bullish, it's very low quantity, not very aggressive either. So that I don't take none of that serious. And Netflix. Nothing for Netflix. Google 100% for March 15, 2024. Okay. 135 strike. That's a sweep order. And last but not least, Amazon. All in calls sweep orders. None of them are expired yet. Alright, guys. So thank you guys so much for watching. If you want more content from Uncle Charles, please consider joining my Discord. I'm leaving the Black Friday deal out still. There's still a good amount of coupons on it that can be redeemed. So I'm just going to leave it out until it all gets redeemed. It's up to you guys if you want to take advantage. But other than that, I just appreciate you guys for being here. And I hope you found value in this content. And good luck this week. And I'll talk to you guys all tomorrow. Peace.